Hello traders and welcome to my daily gold outlook. In my yesterday's comment I said that although we had a big drop last week, gold remains bullish as long as the 1935-1940 zone support is intact, and suggested buying dips near this support as a strategy. Indeed, after a short dip to 1950, the price reversed and reached an intraday high at 1972. By the way, we are on a 4-hour chart. Now, as for what can we expect going further, first of all, I'm not interested in this support anymore. And this zone between 1945 and 1950 becomes the important line in the sand for bulls. Why I'm saying this? As we see from the chart, after the break of the falling wedge that we've spoken about, we have this impulse, a correction in this zone, a new impulse to resistance, and the huge drop from last week also stopped in this zone, and we have reversal. Also, if we draw an ascending trend line from the recent low, we see that this zone is in fact a confluence support. So we need to stay above this to remain bullish. If we breach this zone, I'm pretty sure we will have a reversal and a new test of 1900. But let's not go there. As I said, as long as we are above the 1950 zone, bulls hold the upper hand. In conclusion, buy dips remain my strategy, and I will try to find an entry that will offer me a good risk reward, considering a target at this resistance zone and a stop, as I said, under this level. That's it for today's video. Trade safe and see you tomorrow. Bye bye.